Hello, fellow passive income investors. There's another reason today to celebrate and be happy because there are now more options to how to invest your money than ever before. So today I'm going to reveal a brand new ETF just came from Hamilton, and it actually just started trading yesterday. This is Hamilton US Financial Yield Maximizer ETF from Hamilton, and you can see here it just started trading just yesterday, and it came out to the market at $16, and you can see the day's range is 16 to 16.10. Volume was a little bit higher, up to 44,000 volume of the share being traded. So in this video, I'm going to talk about the composition of this Hamilton US Financial Maximizer. How is it composed? What's in it? And I'm going to show you the performance that it has and the yield. So if you stick around, you're going to learn a lot about this new brand fund and if it's going to be a right for you to invest your money, or you should stay away from it. Again, if it's your first time, just make sure you subscribe. And if you like this content, give me a like. Hamilton US Financial Yield Maximizer ETF, a ticker symbol right now is FMAX, or you can see distribution yield right now is 16 cents. And I'm going to give you the number of the yield from that. Highlight of this fund, of course, initial monthly distribution is $16 and NAV was $16. As I've mentioned, it came to the market at $16, the price range. Right now it's $16.13, so it hasn't lost anything. Exposure to the largest financial service companies in the US. So even though it's Canadian fund, but of course the exposure of this is US, and I'm going to show you what the exposure is about. Active cover call strategy managed by experienced option team, a good fit for investors who wants to attract monthly income, tax efficient distribution, modest to long-term growth potential, and reduce volatility from option strategy. Investment objective of this FMAX is designed to deliver attractive monthly income while providing exposure to an equal-weighted portfolio of U.S. financial services companies. Right, to reduce volatility and augment dividend income, FMAX will employ an active cover call strategy. FMAX does not use a leverage, and the reason I really like this one is because of that what they just said here, equal-weighted portfolio. I love equal-weighted portfolio. This performance, of course, we don't have performance, but I'm actually have performance that I'm going to show you how it has performed within 15 years. What makes FMAX a difference than any other ETF? So many cover call ETF right option out of the money, this one right at the money. So that's the difference between others and this one. FMAX right option on 30% of portfolio of its holding, while allow the portfolio to maintain 70% growth. That's another reason I like it. Only right call on a 30%, that's very low, and 70% is all for growth. So two things that I like about this. The first one was equal weighted, and also the way they write a calls on 30% of the portfolio. So that's a pretty good. I really give applause to the manager for that. When it comes to holdings now, if we look at the fund holdings, before we go to holdings, we can look here at fund details. We can see here the ticker symbol is FMAX, traded on Toronto Stock Exchange. Inception date was on the 6th, so that was just yesterday. Of course, inception is yesterday, but it actually started trading yesterday. So inception was on the 6th, and then of course yesterday was on the 7th. It was on the market, right? Because usually inception comes the day after the market closes, and then the following day start trading. So it start trading on the 7th, and then of course today is the 8th. It's only been one day since it's been in the market. We look at the investment style. It's U.S. financial cover call, right? Again, don't get confused. This is Canadian fund, meaning it's traded on Toronto Stock Exchange, but all the investments they invest, they are U.S. financial institution or U.S. banks and some insurances. Assets so far has 7.4 million, so it's pretty good for just 2 days. Distribution, they do monthly rebalance, they do semi-annual because they're equal weight. They have to rebalance to make sure they come to the mix, proper balance. And management fee is 65 or 0.65. Of course, risk is medium. So we look at the portfolio composition, how many stocks they have. They have Berkshire Hathaway, which by itself is an index. If you look at the Berkshire Hathaway, has so many stocks in Berkshire. So I love this Berkshire Hathaway stock. I really think Berkshire itself, it's like index because it has like 30 companies that invest in the Berkshire Hathaway. There's a Visa, JP Morgan, MasterCard, Bank of America, Wells Fargo, there's Blockstone, Morgan Stanley, S&P Global, there's American Express, Goldman Sachs, there's a BlackRock, Charlie Schwab, Progressive, Citigroup, Chubb Limited, Marsh and McLennan. Some of these companies I don't even know them seriously. CME Group, and there's the Intercontinental Exchange. So it's a pretty good. So look at this. There are 20 stocks. And those 20 stocks, of course, if you do 20 divided by 100, then you get 5%. So they are 5% equal weighted, which is good. And the advantage about equal weight, I'm going to show you in a bit. Why equal weighted? Usually it's a very great strategy in many ways. So if we look at distribution here, when they're going to pay distribution, it's estimated they're going to pay a distribution on, of course, on the 28th the announcement will be on the 28th of February 2024, and then the pay date will be on the 7th of March 2024, and it's going to be about 16 cents. So if you look at 16 cents, or the price of today, which is 16.30, if we do little calculation here, we can know exactly how much it is. So that's about 12%. So by today, you're locking your 12% dividend yield at that price of $16. But now let's go to performance here. There's no performance here, but I have a tool that I can actually backtest this, and we can see the performance of this, because this has, just a hint, has beaten S&P 500. But before we go to performance, how has performed over 15 years, just make sure you subscribe, and if you like this content, just make sure you smash that like button. Within here, I went to backtest. So I took the stocks, the fundy stuff, because the fundy stuff is brand new, and we won't know or they're not allowed to display any performance until after 1 year. But you can look at the Yahoo Finance and other chart. You can see the chart of how the actual fund performs. But at this point, what we can do is to take those. I took those 20 stocks, and I backtest them since back in 2009, which is market crash. Just after market crash, you can see there. So between that time up to now, that's been almost 15 years. Annual return has returned about 17% or 1772, so pretty much 18% annual return. So that's very significant, because that performance has actually beaten the S&P 500, because S&P 500 is about 11 to 12%. This has that returned 17%. So you've beaten index S&P 500 by this portfolio. And the reason actually has beaten, I did other method. The main reason was because it's equal weighted. So if you actually mix, you put other ones higher and the other one lower, you might not get the same results, which I actually didn't. It depends on the mix that you do. But if you equal weight, that's how much you're getting, about 17% annually. So, but again, this performance is just back test on the actual stocks themselves, not the fund. So, Hamilton US Financial Yield Maximizer, or FMAX, beat the S&P 500 as we've seen on the back test. That's to be seen, and the reason why it might actually be able to beat the index S&P 500 by performance is because this writes calls, and of course, when you write a cover call ETF, you're introducing more risk, and also there's a way that your stock, of course, will be sold even though they perform well. But the only hope for me I have is because they only write call on 70%, on only 30%, versus 70% has been left for growth, and also you're getting that 12% dividend. So because of that, I think this fund might perform well, but all has to be seen. The performance I showed you is just back test, and it's hypothetical, and there's no way to know if the same result will be repeated in the future. So that's it for today. I just want to introduce this brand new ETF, and of course there are more ETF that they just introduced actually recently. There's FMAX, there's LMAX, there's EMAX, there's hmax. I'm going to review one by one, and I'm going to tell you the advantage and what disadvantage of them they have. And if you're wondering, should you buy FMAX or should you buy hmax, That's a video for another day. I'm going to compare between FMAX and hmax versus in details, and also the composition of it and performance. So just make sure you, if you don't want to miss that video, just make sure you stick around, or you hit the bell, you just hit the bell button so you can get notification, and don't miss to subscribe. So that's all for today. Till I meet again next video. Bye bye.